All right, this is a spider sector select review. This is going to amaze you. Watch this segment, and I think you're going to see just a fantastic way to understand the markets. All right, last week I made a point that you should buy the strong stocks and sell the weak ones. And I got questions, well, how do you know which is which? And of course, you look at the tape and sometimes it's easy to tell what they're buying and selling, but I like to get a better look at that using our particular studies. Our level 4 and 4 plus members, they now have access to our market monitor. And I'm going to show you a version of that using the spider sector selects and our 4 proprietary studies. And this is an amazing view of 99 stocks at a glance. It's 9 different groups, the 10 heaviest weighted stocks and the 9 particular ETFs. Now, we're not looking at the utilities in here because they're just not interesting to me, but I have it set up with 9 other sectors. And this really helps see the strong versus the weak. You get a clear look at the rotation that's going on. And I want to call it the great rotation because there is a massive money moving out of some groups and into other groups. So you'll be able to see that, or the individual stocks that are strong or weak, and how that money is moving from those one group into some of the individual stocks that I think are important. So let's take a look at this. I think you're going to find this fascinating. So this is a picture of our market monitor. Just to give you an idea of what we have in here, well, of course, here's the stock symbol over here, and this is the name of the company. This is the last price, the 52-week high and the 52-week low, and the PE ratio. So this last price is based on the close on Thursday the 13th, so I could record this just a little bit in advance of the show that we do here on Friday the 14th. So this is the askSlim Reversal Scout. That's this indicator. This is the askSlim ribbon. So it's our slim ribbon. This is our market condition indicator, MCI, and this is our option bias indicator. So these are 4 different indicators. There's some similarity in them. And the Reversal Scout is essentially a moving average that is weighted in a particular way that helps us not only see the condition or the momentum, but also gives us a sense of our cycle analysis when we use that. The slim ribbon is made up of 3 different exponential moving averages, an 8, a 13, and a 21, and this has great programming in the slim ribbon. And of course, when it's green, it's positive, and that means the 8 is above the 13 is above the 21, and when it's red, it's negative. The 8 below the 13 below the 21 exponential moving average. This market condition indicator is a really unique indicator as it has multiple time frames in it. And that essentially, for it to be green, it would mean that the monthly, the weekly, the daily, the intraday, all of them would be lined up in a very strong way. And that's a really good look at market condition of the individual symbols. And the option bias indicator is also very unique because it gives you a sense of how to bias your option positions. And when it's green at a level 3 that you see there, that's very positive. When it's this dark green at a level 2, it's positive but slightly overbought. And when it's orange at a level 1, it is positive but so positive and moves so far that it is extremely overbought and likely to give you a short-term reversal. So all of these indicators are really looking for swing traders and for option traders. So that's really the time frames that you use these indicators for. So let's analyze these 9 different groups and really get a sense for the condition of them. So here is XLE, and these are the top 10 weighted stocks in the XLE. And of course, we know that oil's been going up. It's been very strong. And look at these stocks, all of them. All of them have a solid green reversal scout and slim ribbon. the market condition indicator for Williams and KMI, well, you see these low numbers right over here, 16 and 18? That's a reflection of long-term weakness. In other words, there are some of the indicators that come off of the longer term that says the rally in here is fighting against some weak forces that are likely to turn it down again. And you see this one here, KMI, is orange. That's a 1, which says not only are there some long-term forces, but the very short term, it has come too far and it's likely to reverse for some number of days and some number of points until it works off that overbought condition. Remember, this has a volatility factor in it, and that tells us when it is overbought. So you can see in here generally that the XLE and these 10 stocks in here are quite positive overall, with a couple of them being overbought. KMI is overbought, PSX is overbought and likely to get a pullback. Now let's look at XLF right over here, and you could see the 10 weighted stocks in the financials right there, and you could see all of them bullish. You see that, and you know they've been making really good highs. You look at BRKB, that's generally just a fraction off of its 52-week high, and you could see where they are relative to the 52-week highs. They're all pretty close to that and very strong. Well, Goldman Sachs had a pretty good pullback recently, but they've been really strong. Now you look here, you can see that Berkshire Hathaway is extremely overbought. Look at that MCI reading at 100. That is not overbought. That is just telling you it is intensely positive. So positive that it's likely to pull back. This is orange. You can see the same thing right here at Wells Fargo. Very strong. Of course, it was a very beaten up stock, and now at the point where it's likely to give you some downward reversal in there. Wells Fargo is going to report earnings pretty soon. So that's the look that you get in there. Interestingly, Goldman Sachs, you can see the market condition indicator is now at minus 53, and that's telling you there's some longer term forces in there that maybe bear some watching. And of course, this one has moved down sharply off of its 52-week high. You can see BlackRock here, red all the way across. That gives you some kind of indication of the kind of negative situation you have there for BlackRock. Let's just take a moment and let's switch over. I'm just going to click on BlackRock, and it's going to fill up this chart right over here. And you can see in here in BlackRock that the stock has been weak, coming down. This is the slim ribbon PO, which is the signal indicator for the slim ribbon, and you can see it's negative momentum. So that gives you an idea of the negative condition of BlackRock and this doesn't lie. I mean, the indicators really scream at you. Let me just scroll this up and we'll take a look here at the healthcare. So this is XLV, and you can see XLV, the reversal scout now is turned down. The market condition indicator is down at only 20, and it's red. The slim ribbon is in the neutral category, and so is the OBI. So these stocks in the XLV are not in great shape. Now look at Johnson, UNH, Pfizer, Abbott, Thermo Fisher, AbbVie, Lilly, all of those red in here. These stocks are not in great shape when you look at that. There's these numbers over here on the market condition indicator. Now, when they get to 20 and when they get under a minus 25 is when you really start to get into a negative condition. Here's a minus 85 on Danaher. You see that, how negative this stock is. So these are not stocks that you're going to want to be buying when you look at that. The XLV does not look great overall, and you can see that money has been flowing out of those stocks. Of course, tons of money went into them because of the pandemic, and now that there's hope the pandemic will be ending soon, then you have that condition that is likely to be not as good for those stocks. Let's look at right over here at the XLI, and you can see the industrials. Look at these green, 87.3 on the OBI, which is the most powerful you can be. This is all powerful, and that says the industrial stocks are strong. Now, when you look at Union Pacific and UPS, there's some indication here that there's been some deterioration when you look at that. You can see. Now, these are not that far off their 52-week highs, but you're getting a little sense. The MCI is down here in the 25 and 32 area, so not really strong, but OBI still says they're in good shape. So you're getting a mixed reading right in there. But here you can see Honeywell and Raytheon, Caterpillar, Boeing, GE, Deere, Triple M, Lockheed Martin, all those 10 other weighted stocks are looking pretty strong in here. Now look here at Boeing. You see that orange one that says it's extremely overbought, and that says look for a pullback. But because of these positive conditions, that pullback is likely to be a buy. So you get some great information just by looking at that. Remember, this is 99 stocks really we're looking at, 9 different groups at a glance, and you get a great sense for that. This is an amazing app, this Market Monitor. So XLB, the materials, you can see that it's a pretty mixed group when you look at this. There's some stocks like Sherwin-Williams that's pretty negative. You can see the market condition indicator at -11. Now this goes to -100 or +100. So -11, when it gets to under -25 is when it's confirmed that a negative, really negative condition. So that's not a great looking stock. Neither is Air Products. But then you look at some of these other stocks, Newmont, which of course is a gold stock. And gold has firmed up some. Neutral here on the OBI, so 72, a nice reading right there on the market condition indicator. So this is not bad. In Newmont, Dow is, well, this stuff isn't reading right now, but still not in bad shape right over there. DuPont looks really strong, slightly overbought, but not too bad. So that's a strong one. And look at these other ones in here. International Flavor and Fragrance, PPG, those are, PPG is, IFF really doesn't look good at all. And that's, of course, a stock that is only shortable in our what we look at right here. So that's a look at those, a great look at the XLB, the material stocks. Now we're in XLK. And XLK is the techs, Apple, Microsoft, NVIDIA, and Visa, MasterCard, Cisco, Broadcom, Adobe, Accenture, Salesforce. Those are the top 10 weighted in there. And look at where the money is coming out of in here, as you can see that. These are very weak stocks. These are not stocks that you're going to want to be buying. Look at Microsoft. Everybody was buying that one, pouring money into it. It is 44 points off of its all-time high, as you can see right over there. 52-week high was the all-time high, and some pretty negative readings. If this is -36, once it crosses under -25, it's pretty negative. Slightly oversold, but overall Microsoft, which was really a favorite, the money is pouring out of that. The same thing for NVIDIA, because everybody thought their chips were going to be so in demand because of cryptocurrencies, but of course cryptocurrencies, in my opinion, are in big trouble. So the NVIDIA, you could see that's really in bad shape. Money really pouring out of these. Look at NVIDIA, 81 points below its all-time high. Visa, that's a big move, 37 points below its all-time high. Look at these. They're way, way down from all-time highs. Very significant. I was trying to see if there was a percentage way I could get the percentage from all-time highs, but it's really not available in there. So this is where the money is pouring out of in there when you look at that. Let's take a look here. I'll just scroll this so we can get this. Well, that's it. We've got it all now. So this over here is the XLC, which is a new one, which is the communications. And in there are Facebook, Google, both Googles. That's Alphabet. AT&T, Verizon, Walt Disney, Comcast, Charter, T-Mobile, and Netflix. And you could see Netflix, of course, they were buying like crazy. It's almost 200 points, 180 points below its all-time high. T-Mobile, 40 points. These are giant declines that they've had in here, but still, look at Telephone, Verizon. These stocks are actually pretty good. Telephone is overbought. You see it's orange right there, but a 99. That says to you This is going to pull back. You might not want to short it, but you might let it pull back so that you could buy it again. That shows you a lot of strength in there. Charter, T-Mobile, horrible when you look at that. And take a look at Netflix. This is -1 orange that says extreme oversold. Look at this reading, -100 on the MCI. Remember, this is not an oversold indicator. This is an indicator of extreme negative condition. Market condition indicator is what that is. So Netflix really in bad shape. It could bounce. If it does, it's likely to be a sell. Here's XLY. You can see that right there. As we look at the consumer stocks, we have the consumer staples and the consumer discretionary. Amazon is in that category. And look at Amazon. This is so weak. This stock is now 550 points off of its all-time high. A lot of selling in here, slightly oversold. -97, the condition is horrible, and it says if it tries to rally, well, look out. Tesla's still holding up okay. Now, the market condition indicator at 12 is eroding, but not too bad. Neutral here on the OBI, option bias indicator. So it's kind of mixed when you look at Tesla. Here you have Nike, which was really getting bought like crazy. It's 30 points off of its all-time high, and -96 reading there. Oversold, very significant, as you could see. If it bounces, it's very likely to be a sell on that bounce. Same condition you have right over here in Starbucks. If it bounces, it's likely to be a sell. Let's take a look at the Starbucks chart just for the fun of it, so you get an idea as to what this looks like. This has our cycle analysis on there, and you can see the rhythms in this market when you look at that as it moves up. In these positive rising phases, and then down in the corrective phases, up, down, and now this is so negative in here. Remember, this is oversold. You're likely to get a bounce. A bounce could be all the way up here to 108, but then it's likely to be moving down again. I want to short this one at 108, so you get a pretty clear look at how you can go from the market monitor to the individual charts. Target is, you could see it's still, the reversal scout's still holding up there, but some of these more sensitive indicators are really negative. So Target is not looking in great shape either. And Ford, absolutely phenomenal. You can see that right there. As its reversal scout, positive, slim ribbon, positive, 100 reading on the market condition indicator, and a +3 on the option bias indicator. And of course, it's right at its all-time high. And this is all about its move into electric vehicles, and it's at the high for the year, and probably still has more to go. And here's XLP, and you could see there in these consumer discretionaries that are listed in there that mostly they're in good shape. Costco is not in good shape. When you look at that, it's pretty significantly off of its all-time high, or 52-week high, which is the same. When you look here at Pepsi, that looks great, doesn't it? Really solid. When you look here at Ford, again, that looks solid. I jumped out of that group. Here is right here, Walmart. Actually, this one is a tough one. This one still looks pretty solid when you look there. The MCI is just a little bit low, but the stock's only about 7 points off of its high, so that looks pretty good. That is a look at the market monitor. I want to give you one more little look at how you could use this. I talked about the OBI, the option bias indicator, and that, you know, when it's at orange, it tells you that when it's at an extreme and likely reverse. So I'm just going to click on this because you can scroll, as you see right there, and I'm going to go down and I'm going to look for the orange readings. So all of these stocks, you can see, all but one, are all green all the way across. When you look there, that is Phillips, Kinder Morgan, Berkshire Hathaway, Wells Fargo, Boeing, Deere, Telephone, and Philip Morris. All of those are super powerful. Look at these MCI readings right over here. All super powerful, all orange. So if you were long these stocks, or you had an option bias that was to the long side, you would now want to neutralize that, because this is telling you the probability is high of pullbacks in these stocks. Now, they may not be shortable because of this issue right over here of them being all really, really strong on all the other indicators. Now, if I continue to scroll here, you'll see two stocks right there. That's Netflix and Nike that are really negative stocks. Look at those readings, minus 100, minus 96 on the MCI, but they are ready to bounce. You can see that right there, and there's actually one more there. It's also a Starbucks, and you can see that. I just showed you that Starbucks chart, that it is ready to bounce. So these are three very negative stocks that if I was short them, then I would cover, because I think that they are going to reverse to some reasonable bounce. Remember, we said 102 to 108 in Starbucks is a likelihood. So, and then I'd be shorting them again. So you get a good idea of that. You can also scroll on any of these and see, which are the most negative. Here's your reversal scout right there. And here's the most negative on the slim ribbon. And here's the most negative here on the MCI. You can see that. Or you could look for the most positive under there. And there's all your positive ones right there in the slim ribbon. It gives you a great way to use. This is a great tool. So I really encourage you, if you're not a level 4 member, you could easily become one by, if you're a member, you can upgrade, or write to team@askSlim.com and ask them for the information on becoming a level 4 or 4+ member. And you have to be a TD Ameritrade account holder to be able to use this, because it runs off of Thinkorswim, and you can just sign up and open an account right on our page there. So I took a kind of a long time looking at this, but what a great way to get a sense for the condition of these stocks on our 4 great proprietary indicators. I hope you loved that. And again, write to team@askSlim.com for more information on the level 4 membership and the market monitor. Thanks for watching that.